Good evening, everyone. I've been Alexander and I am.
Good evening, sir.
Good evening, sir.
Okay. I hope all of you are doing fine.
Yes, sir.
Yes, sir.
All right, everyone. So, in the previous session, we were talking about the treatment of goodwill, especially in case of admission of a partner. So, while discussing about the treatment of goodwill, I've told you that the we can classify the goodwill as the purchase goodwill and the self-valued goodwill. So, the treatment of the purchase goodwill will be same as we used to do under the deconstitution of the firm. But when it comes to the admission of partner, the treatment for the self-valued goodwill will be little different, since the new partner who will be joining the firm need to contribute toward the self-valued goodwill by way of premium for goodwill. And when he brings premium for self-generated goodwill, then we need to pass few journal entries. First of all, the first journal entry will be for the amount of capital that he's introducing in the business. And the second journal entry will be for bringing in the premium for goodwill. Then further, this premium for goodwill, which is brought in by the new partner, is distributed among the sacrificing partner in their sacrificing ratio. So we have discussed all these things in the previous class. I hope all of these things are clear to everyone. In today's session, we will be we'll discuss few questions based on the treatment of the goodwill. And if I'm not wrong, I think we already started the question based on the treatment of the goodwill in the last session as well. I think question number 104 we have discussed it in the previous class, and 105 I guess this one is also done in the previous session. And I gave you I think 106 as homework. Tell me if I'm wrong.
Yes, sir.
Yes, okay. So before going forward, before doing 107, just wanted to confirm whether do you have any doubt regarding this question?
Sir, just a small doubt. Sir, when we get the gaining or sacrificing ratio, we how do I say? You multiply the premium, like in this example, it's 3/20 and 2/20. So do you just multiply by 3/20 or 3/5? Because I feel like the answer is wrong
See,
otherwise.
you should get the same answer. Either you multiply 3/20 or 3/5. No?
No, sir, I
The
get
answer is different in both the cases.
yes, sir.
Three by 20 and 2/20 is the sacrificing ratio, right?
Yes, sir.
Okay. So in that case, yeah. See, the you should take the ratio as 3:2. If the sacrificing ratio is calculated in this format, 3/20 and 2/20, that means the sacrificing ratio will be 3:2. So you should only use 3/5 to find out the uh, value of the goodwill. Uh, I mean, in order to distribute the goodwill, we should just multiply 3/5 and 2/5.
Okay, sir. Thank you. Understood.
All right. Anything else? Anyone? Anybody want to ask anything? All right. So I think question 106 was the only homework that I gave you in the previous class. So we will be starting our discussion with question 107. We'll start with question 107. All right. So let's just read this question once. Question 107 is saying that there are two partners, Anshul and Parul. They are sharing the profit and losses in the ratio of 3:2. They admitted Payal as partner for 1/4 share in the profit on 1st of April. Payal brings in 5 lakh as capital and her share of goodwill by way of check. Okay. So the amount of capital is given in the question, but how much goodwill Payal is bringing in, it is not given in the question. All right. The only thing that is mentioned in the question is that she will be bringing her share of goodwill. All right. So that means whatever the total value of the goodwill of the firm, she will be contributing 1/4 of the total value of the goodwill. It was agreed that the value of goodwill at 3 years purchase, of the average profit of the last 4 years. So the last 4 years profit is given, starting from the year 2015-16 till the year 2018-19. We have made a profit of 4 lakh, 5 lakh, 6 lakh, and 7 lakh respectively. Few additional information is also given there in the question. Like closing stock for the year ended 31st of March 2018 was overvalued by 50,000. And second information is 1 lakh should be charged annually to cover the management cost past the necessary journal entry. So see, first of all, the new partner is admitted for 1/4 share in the profit. This is the first information, right? And the new partner is bringing in the capital, number one, and she will also bring her share of goodwill. So the amount of capital is already given in the question, but the value of goodwill that Payal will be bringing in the business by way of premium for goodwill, that is not given in the question. The only thing that is mentioned here is that she will be bringing her share of goodwill. So to find out her share of goodwill, we will have to first of all determine the total value of the goodwill of the firm. Total value of goodwill of firm. And to determine the goodwill of the firm, it is given in the question that it was agreed to value the goodwill at 3 years purchase of the average profit. So basically, we need to find out the average. We need to find out the goodwill on the basis of 3-year purchase of the average profit. That means we need to apply which method of the valuation of goodwill. Anybody is able to recall that we have 4 methods to value the goodwill, right? The average profit method, the super profit method, weighted average profit method, then capitalization method, if you are able to recall that. So in this question, which method will be applicable to find out the value of the goodwill of the firm?
Sir, average profit.
Correct. Very good. Average profit method will be applicable. And to determine the goodwill by average profit method, we have profit for 4 years are given in the question. And based on the last 4 years profit, we will be able to determine the average profit of the last 4 years. And whatever the average profit we will get, we will simply multiply it by 3 so as to get the value of the goodwill. And then whatever the value of goodwill you will get, you just need to multiply it by 1/4. So as to get the Payal's share in the goodwill. All right. Then question further says that the closing stock for the year ended 31st of March 2018 was overvalued by 50,000. Now see, if the closing stock is overvalued for the year 2018, that means the profit that is calculated for the year 2017-18 must not be correct, right? If the closing stock is overvalued, then obviously the profit calculated for the year 2017-18 must be incorrect. Is that right?
Yes, sir.
And since the value of the closing stock for the year 2017-18 is overvalued, it is going to impact the opening stock of the next year as well for the year 2018-19. That means profit of the next year 2018-19 must also be incorrect.
Yes, sir.
Everybody is able to understand this? See, what I'm saying is that if the closing stock of a particular year is overvalued or undervalued, that affect 2 years. Number one, the current year and the next year as well. Like for example, in this case, closing stock of the 2017-18 is wrongly taken as 50,000. Sorry, I'm sorry. It was overvalued by 50,000. So that means the profit calculated for the year 2017-18 will be incorrect, as well as the profit for the year 2018-19 will also be incorrect. since the closing stock of 1 year will become the opening stock of the next year. And if the closing stock is incorrect, then the profit of this year is incorrect and the profit of the next year will also be incorrect. So, in order to determine the average profit, we will have to first of all correct the profit of the years that is given in the question. One more important thing is here that in point 2 it says that 1 lakh should be charged annually to cover the management cost. So basically this 1 lakh is not taken into consideration while calculating these profits. So that means in order to find out the correct profit, we will have to subtract the annual management cost, number one, and also correct the profit of the year 2018 and 2019 as well, so as to find out the correct profit, and only then you will be able to find out the correct average profit, and then only then you will be able to find out the correct value of the goodwill. Everybody is able to understand this?
Yes,
Tell
sir.
me yes.
We should
Okay.
subtract 1 lakh from all the profit, all the years.
Yes.
Okay.
Since it is an annual management cost and it is not charged annually. Previously, it is not taken into consideration. Now, in the additional information point 2 is it is written that 1 lakh is the annual management cost. So we will presume that it is not subtracted while calculating the profit of the last 4 years. So now to correct the to find out the correct profit, we will have to subtract it.
Okay, sir.
Tell me if anyone have any kind of doubt. Everybody, am I audible to all of you?
Sir, first we have to add the profits of the last 4 years, then we have to subtract the 1 lakh.
No. See, we will have to first of all. Okay, just let me show you how this will be done. Let me solve it for you. Okay, you just need to pay attention. Try to understand. Okay, just wait for a moment. Just a moment.
Sir, we are not able to see the board because of the question. Yeah.
Just a moment. Yes, see, this is how we will be calculating the correct profit of the firm. See, first of all, we need to prepare a statement showing calculation of profit, and we need to find out the correct profit for all the years, for the year 2015, 16, 17, 18, 19, for all the years. And for that purpose, we will be preparing a statement. You just need to pay attention. I'll give you some extra time to note this down. See, first of all, we will be writing the profit of all the different years. For the year 2015-16, the profit that is given in the question is 4 lakh. For the year 2016-17, it was 5 lakh, then 6 lakh, then 7 lakh. All right, everybody is able to understand this?
Yes, sir.
Yes, sir.
Okay. Then question says that for the year 2017-18, we have overvalued the closing stock. We overvalued the closing stock of the year 2017-18. Now, let me explain this to you. See, whenever closing stock is overvalued, how it impact the profit of the current year as well as how it impact the profit of the next year, that we will have to understand. Closing stock overvalued. So first of all, if closing stock is overvalued, it is going to affect the profit of the year for which the stock was overvalued. So closing stock was overvalued for the year 2000 in the year 2018, right? That means for the year 2017-18, when you will find out the profit will be incorrect. Now listen to me very carefully. Whenever closing stock is overvalued, profit of the current year increases. Profit increases due to overvaluation of the overvaluation of the stock. And at the same time, it is going to affect the next year profit as well, 2018-19. How it is going to affect the next year's profit? Next year profit will be reduced by the amount by which closing stock was overvalued. Profit will decrease. Profit decreases. Now, listen to me. See, the question is saying that closing stock was overvalued by 50,000, right? That means the profit of the 2017-18 must have been increased by 50,000. So current year's profit must have been increased by 50,000. 2017-18 profit must be more by in excess of 50,000. And at the same time, for the year 2018-19, profit must have decreased by 50,000. All right. So whatever the profit that is given in for the year 2017, it is already overvalued. All right. So now, in order to correct the 2017-18 profit, what should we do? Tell me. Due to the overvaluation of the stock, 2017-18's profit is increased by 50,000 and 2018-19 profits decreased by 50,000. Now, in order to find out the correct profit, what should we do? So we should subtract 50,000 out of the profit of the 2017-18. Now, see, this is the wrong profit that we have calculated. Now, to find the correct profit, what we should do? We should subtract 50,000 out of the profit. Is that correct, everyone? Everybody is able to understand this?
Yes, sir.
And for the year 2018-19, what should we do? We should, since the profit for the year 2018-19 is reduced by 50,000 because of the overvaluation of the stock of the previous year. Now, to find out the correct profit, what should we do? We will simply add 50,000 in it. Is that right, everyone?
Yes, sir.
So profit for the year 2017-18 will be reduced by 50,000 and 2018-19 will be increased by 50,000. Why only Alexander is responding? No one else is able to understand. Hiba, Mariam, Ayan, Abin, everybody is able to understand this, yes or no? Okay, Mariam is saying yes, sir. Abin, please, I'm not able to hear you.
Sir, slowly.
You're not able to understand it completely. Ayan,
Yes, sir.
you want me to explain it again? Anyone?
Yes, sir, explained.
Okay. See, what I'm saying is that question basically says that the profit for the year 2017-18, the closing stock for the year 31st of March 2018 is overvalued. Closing stock was overvalued for the year 31st of March 2018. Now, what I'm saying is that whenever the closing stock of a particular year is overvalued, then it affects the profit of the current year. Profit of current year is affected due to the overvaluation of the closing stock, and at the same time, profit of next year also get affected. Now we need to understand, whenever the closing stock is overvalued, how does it impact the profit of the current year? Current year, as in, sir, current year basically means 2017-18, and next year means 2018-19. All right. So due to the overvaluation of the closing stock, profit of the current year, that is 2017-18, must have been increased. Profit must have been increased. Profit increases by 50,000. You need to understand this. Whenever closing stock is overvalued by, let's suppose closing stock is overvalued by 50,000, that means it is going to increase the profit by 50,000. And when the closing stock of 2018 is overvalued, then it is also going to increase the opening value of the next year, opening stock of the next year. And because of the increase in the opening stock of the next year, the profit will decline by 50,000. So increase in closing stock, overvaluation of closing stock, not only affect the profit of the 2017-18 by 50,000, but at the same time, it also affect the profit of the next year. How does it affect? It reduces profit of the next year, decreases by 50,000. All right, everyone, profit reduces. Now, whatever the profit that we have in the year 2017-18, it must be in excess of 50,000. See, for the year 2017-18, what was our profit? Profit was 6 lakh. Everybody is able to see that.
Yes, sir.
But this profit is in excess by what amount? It is in excess by 50,000.
50,000.
Correct. So 50,000 is wrongly taken into consideration, wrongly credited to the profit and loss account because of the overvaluation of the stock. And at the same time, 2018-19's profit should be 7,50,000 instead of 7 lakh. Everybody is able to understand that?
Yes, sir.
So
Yes.
profit of the current year, because the profit increased by 50,000. So now if we want to find out the correct profit, then what should we do? We should, tell me, we should subtract 50,000 to find out the correct profit. Subtract 50,000 out of the profit. Is that clear, everyone?
Yes, sir.
And at the same time, to find out the correct profit of the next year, we should add 50,000 in the profit of the 2018-19. Everybody, is that clear? Tell
Yes,
me,
sir.
Hiba, Mariam, and everyone else.
Yes, sir.
Ayan,
Yes.
Abin. Okay. So coming back to the statement, just a minute. Yeah. So this was our statement. The statement showing calculation of profit. So first of all, we wrote the profit that is given in the question. So 4 lakh, 5 lakh, 6 lakh, 7 lakh. But we understood that the 2017-18's profit is in excess of 50,000 because of the overvaluation of the closing stock. So in order to find out the correct profit, what we should do, we should subtract the closing stock that was overvalued by 50,000. So we need to subtract 50,000 out of 6 lakh. And at the same time, we will add closing stock that was overvalued by 50,000 to the 2018-19 profit. So we will add 50,000 in the 2018-19 profit, and we are subtracting 50,000 out of 2017-18's profit. Everybody is able to understand it now?
Yes, sir.
Mariam, Heba, Ayan.
Yes, sir.
Okay. All right. So closing stock overvaluation is affecting, in order to correct the effect of the overvaluation of the closing stock, we have subtracted 50,000 out of 2017-18's profit, and 50,000 we have added in the 2018-19 profit. And we need to subtract the management cost as well, since it is given in the question that the 1 lakh should be charged annually to cover the management cost. If you are able to see in the additional information too, it says that 1 lakh should be charged to cover the management cost. So what we need to do, we will be subtracting 1 lakh out of the profit of every year. 1 lakh out of 2015-16's profit, 2016-17, 17-18, 18-19, every year, out of every year's profit, we will be subtracting 1 lakh. And by doing that, we will be able to find out the correct profit of the last 4 years. 4 lakh minus 1 lakh, we will be left with 3 lakh of profit for the year 2015-16. And for the year 2016-17, it will be 5 lakh minus 1 lakh, that will be 4 lakh. And for 2017-18, we will subtract 50,000, we will subtract 1 lakh, further 1 lakh out of it. So the remaining value will be 4.5. And 2018's correct profit will be 7 lakh plus 50,000 minus 1 lakh, that will be 6.5 lakh. That is 6,50,000. I hope this is clear. This statement is clear to everyone. Please confirm if anything is not clear. Please ask if anyone have any kind of doubt.
No, sir. We are
Ayan,
able to
Heba,
understand.
Mariam, is everything clear? Abin, Alexander, is everything clear?
Yes, sir. Clear.
Sir, can we note it down?
Yeah, just a minute. Let me just explain it. Okay. Now see, why we were finding out the correct profit. We found out the correct profit so as to determine the average profit of the firm. So how do we determine average profit? So in order to find out the average profit of the last 4 years, what we will do, we will just add profit of the last 4 years. That is, for the year 2015-16, it was 3 lakh, then 4 lakh, then 4.5, then 6.5. All right, we have added all these profit, and by adding it, we will be getting, I guess, 4 plus 3, 7, 18 lakh. 18 divided by 4, we will get 4,50,000 as the average profit of the firm for the last 4 years. I hope this is also clear, everyone. Is that clear, all of you?
Yes, sir.
Okay, now since we need to find out the average profit so as to determine the value of the goodwill, now we will apply the formula of the goodwill of the firm by average profit method. The formula is, if all of you are able to recall, that average profit into number of year purchase. I'm sure that everyone is able to recall this. We already done a detailed topic based on the valuation of the goodwill. So average profit into number of year purchase, we will get the total amount of goodwill, that is 13,50,000. 4.5 lakh into 3 years, that will be 13,50,000. Tell me if the calculation of the goodwill is clear to everyone.
Yes, sir.
Yes, sir.
Yes, sir.
Okay, now this is the goodwill of the firm. All right, this is the goodwill of the firm. We are not required to find out the goodwill of the firm. We just need to find out the goodwill share, or share of goodwill by share of goodwill of Payal. We just need to find out the Payal's share in the total value of the goodwill. So for doing that, for finding out the Payal share in the total goodwill, what we will do, we will simply multiply it with the Payal's share. Payal is coming for how much share? 1/4 share in the profit. Is that right? So to determine the Payal's profit, what we will do, we will simply multiply 1/4 into 13,50,000, and then we will find out the Payal share in the total goodwill of the firm. That will be 3,50,000. Is it clear, everyone?
Yes, sir.
Everyone else, Hiba, Mariam, Eben, Ayan, all of you
Yes, sir.
is
Clear.
able to clear. Okay, once we get the value of the goodwill, now we can pass the journal entry. So first journal entry will be, okay, just a minute. I think she's also bringing some capital. Huh? Yeah, Payal is also bringing capital, so we need to pass the journal entry for the capital as well, right? So the journal entry for the capital will be cash account debit, or the bank account. Yeah, bank account debit to Payal's capital account. Is that right? Payal is bringing in 5 lakh as capital, so the journal entry for bringing in capital will be cash account debit to Payal's capital account. Is that correct? Sorry, bank account debit to Payal's capital account, because she is bringing in capital by way of check, na. So we need to pass the general entry as bank account debit to Payal's capital account. Is everybody is able to understand this point?
Yes, sir.
Yes, sir.
And then we will be passing the journal entry for the premium for goodwill, and the journal entry for that will be cash account debit to premium for goodwill, 3,50,000, 3,50,000. And we need to distribute it among the partners, right? We need to distribute it among the partners in their sacrificing ratio. Premium for goodwill is distributed between the partners now who are sacrificing. Whoever is sacrificing, we need to distribute the premium for goodwill among those partners, na, everybody. So for that purpose, we will pass a separate journal entry that will be premium for goodwill account debit to. Obviously, Anshul and Parul must be sacrificing, and how much they are sacrificing, we need to prepare an extra working note to determine their sacrificing ratios. All right. Okay, just do one thing. Just note till the Payal share of goodwill. Then I'll explain you the general entries as well. So I want everyone to note this down quickly. Solution to 107. Please prepare the statement of the calculation of the correct profit. And once you are done, please let me know so that I can scroll down. And if anyone is having any problem, any doubt, please let me know so that I can explain him or her further.
Done, sir.
Done, all of you.
Sir, wait, sir. Two more minutes. Sir, wait. Sir, can you show the average profit?
Done. Do it quickly now. We need to do more questions. All right. See, we already understood the calculation till the piled share in goodwill of the firm, wherein I've told you that whatever the total value of goodwill we have got, that is 3,50,000. We just need to multiply it by the pile share in profit, so as to find out the pile share in the goodwill of the firm.
Can you show the
So
goodwill?
by solving it, we will get 3,50,000. Okay. Then after doing this, we need to pass the general entries. And the general entries for the premium for goodwill will be cash account debit to premium for goodwill account, that is 3,50,000. And the same need to be distributed between the partners and their sacrificing ratios. Right. So for that purpose, for distributing it to partners and their sacrificing ratio, we need to find out the sacrificing ratio of the partners as well. So for that we will have to prepare an extra working note. See, this is how we will find out the sacrificing ratio of the partner. I'm sure all of you already know how to find out how to determine the sacrificing ratio of the partner. See, showing the calculation of sacrificing ratio. How do we find out the sacrificing ratio of the partner? We will have to first of all find out the new share of the partners, Anshul and Parul. So since the new partner is coming for 1/4 share, that means after admission of the new partner, the remaining share will be 3/4, and this 3/4 share will be distributed between Anshul and Parul, and Anshul and Parul will be taking over the remaining share in the ratio of 3:2. Is that right? So the remaining share is multiplied with by 3/5 to determine the Anshul's new share, and it is multiplied by 2/5 so as to determine Parul's new share. And after multiplying it, we will get 9/20 and 6/20. This will be the new profit sharing ratio for Anshul and Parul. All right. So
Sir, can you
now,
show the pile share in the goodwill?
yeah, just a minute. Let me explain this and try to understand this first. No, don't keep on writing. All right. So now to determine the sacrificing ratio. For sacrificing ratio, we already know there is a formula which says new ratio minus old ratio equals to sacrificing ratio. So Anshul equals to 9/20. This is the new ratio of the Anshul, and this is the old ratio of the Anshuls. So 9/20 minus 3/5, we will get minus 3/20. And for Parul, it will be 6/20 minus 2/5. You will get 2 minus 2/20. So that means the new profit sharing ratio will be 3:2. All right, and the goodwill that we calculated in the above in the above calculation, 3,50,000. It will be distributed between the partner in the ratio of 3/5 and 2/5. So this is the sacrificing ratio in this question. I hope it is clear, everyone.
Yes, sir.
All right, so quickly note this down, all of you. Quickly note this down. We need to solve more questions, huh? Otherwise, we will be. I don't want to discuss only one question in the entire session. Do it quickly, note this down, and let me know once you're done. And one more thing, we need to pass the journal entry for the capital as well. So in this calculation, I did not pass the general entry for the capital that pile is bringing in. But while you are preparing notes, make sure you pass the general entry for the capital as well. That will be bank account debit to pile's capital account. Done, all of you. Shall we move to the next question, please?
Yes, sir.
Wait. Sir, the journal entries only master.
Evan, just take the screenshot of the solution, please, and note this down after the session, because we are getting late and we need to start more question. Otherwise, you need to increase your writing speed. Just a request, please take the screenshot for now and later note this down. If you already understood that, I guess you won't be having any problem writing it down later. Please take the screenshot. Abhin, is that clear? And everyone else, Ayan, Heba, Mariam, all of you are done with this question. Anyone want to ask anything? Heba, Ayan, Mariam, any doubts?
So can you show the working
Next question.
screenshots?
Done.
Yes, sir. Done.
Question 108. A and B are partners sharing profit in the ratio of 2:1. They admit C for 1/4 share in the profit. C bring 30,000 for its capital. 8,000 out of a share of rupees 10,000 for goodwill. Before admission, goodwill appeared in the book at rupees 18,000. Give journal entries to give effect to the above arrangement. Okay. So this question have something different this time. First of all, question is saying that there are two partners, their profit sharing ratio is given as 2:1, and they are admitting one new person as a partner who is coming for 1/4 share in the profit. And the name of the new partner is C, and he will be bringing 30,000 as capital, number one, and he will be giving his premium, sorry, his share for goodwill will be 10,000, but he is only bringing 8,000. See, the total obligation for Mr. C towards the premium for goodwill is actually stands at 10,000. The total premium that he need to brought in by way of premium for goodwill is actually standing at 10,000, but he is only contributing 8,000. All right. Now you can see that there is a clear difference of 2,000 rupees. His total liability to pay for the premium for goodwill is 10,000, but he's only giving 8,000 by way of goodwill. So we need to understand how are we going to deal with the remaining 2,000. All right. For goodwill, before admission, goodwill appeared in the books at rupees 18,000 as well. All right. So question is telling us that before the admission of the partner, there was a goodwill that is appearing in the book. I've already told you that whenever goodwill appears in the book, whenever it is written in the question that some amount of goodwill is already appearing in the book, that means that is the purchased goodwill. Only purchased goodwill appears in the books of account. Self-valued goodwill is never shown in the books of account. All right, so 18,000 is the value of the goodwill for what kind of goodwill it is. It is the purchase goodwill because it is appearing in the books of account. All right, so I'm sure that all of you already know how to deal with the purchase goodwill. Purchase goodwill is simply written off, and it has to be borne by all old partners in their profit sharing ratio. It will be written off in the among the old partners in their profit sharing ratio. All right, so we already understood these concepts in the previous classes. Anyways, so first of all, the thing is that the new partner is entering the business for 1/4 share and he's bringing in 8,000 by way of goodwill instead of 10,000. Okay, so let me show you how to do this question. First of all, since it is the purchase goodwill, we can first of all write down the writing of entry for 18,000, right? And then the capital also C also brought capital of 30,000. We will be passing the general entry for bringing in the capital, and then we will be passing the general entry for the goodwill. Now you can see that the goodwill is actually the amount that he need to contribute is 10,000, but he's only bringing 8,000. Now, how are we going to deal with the remaining amount? That I'll be telling you. Just a minute. Okay, so let's pass the journal entries. First of all, since there is already purchased goodwill appearing in the book, so we need to pass the writing of a journal entry for that. So journal entry treatment of purchased good or treatment of goodwill appearing in the book. What will be the journal entry for goodwill appearing in the book? Sir, journal entry will be very simple. Goodwill account debit. Goodwill account debit to old partners capital account. Old partners were, name of the partners were A and B, and their profit sharing ratio was 2:1. So A's capital account to B's capital account, right? And the amount of goodwill was 18,000. 18,000. So that means 18,000 into 2/3. That means 12,000 for A's capital account. A's capital account will be debited by 12,000, and 18,000 into 1/3. So B's capital account will be. I guess the general entry is incorrect. Their account need to be debited now. I'm sorry. Goodwill, since goodwill is, we are writing of the goodwill, so the general entry will be A's capital account debit, B's capital account debit to goodwill account. Sorry, this will be the general entry to goodwill account 18,000, and we can also write down the relation as being goodwill written off. Got it, everyone? Is this clear to all of you?
Yes, sir, clear.
Everybody, Mariam, Hiba, Ayan, Evan, is it clear?
Yes,
This is
sir.
how we treat the purchase bill.
This is the journal entry when the goodwill is
When
purchased.
goodwill appears in the book, that this is the general entry that we do.
Yeah, when the
Okay, I hope it is clear. Okay, moving on to the next point, treatment of capital that the new partners brought in. Treatment of capital. Capital by partner C. So whenever a new partner brings in capital, his share of capital, the general entry for that is cash account debit, assuming that he's bringing in capital by way of cash. So cash account debit to C's capital account. And the amount of capital was 30,000. Got it, everyone? You can write down the narration as well, being C brought his share of capital. Done, everyone? Any doubt? Yes or no? Say something.
No
Siba,
doubts.
Mariam. Okay. Treatment of, now finally we will treat the we need to generalize the self-valued goodwill. So the treatment of self-valued goodwill, or you can say premium for goodwill. Treatment of premium for goodwill. Okay, so the treatment for premium for goodwill will be how much goodwill he is actually bringing in. New partner is bringing in capital of only the goodwill of only 8,000, but the total premium for goodwill that he need to bring is actually standing at 10,000. So instead of 10,000, he is only giving 8,000, right? So how do we treat this? First of all, we'll write down, since he's bringing goodwill, and we will presume that he's bringing goodwill in cash. So we'll write down cash account debit, 8,000, right? To premium for goodwill. How much he should actually contribute by way of premium for goodwill? Tell me.
10,000.
10,000, correct. So 10,000 is the actual premium for goodwill. Now, if the total liability is to contribute 10,000 and he's only giving 8,000, the question arises, how are we going to deal with the remaining 2,000? How are we going to adjust that 2,000? So whenever partner is contributing less than what he is actually required to contribute, then the remaining amount is adjusted out of his capital account. That means in this case, if he's contributing 8,000 by way of cash and remaining 2,000 is still there, then the remaining 2,000 will be covered out of his capital account. Got it, everyone? This will be covered through his capital account. So the general entry will be, tell me, cash account debit, C's capital account debit by what amount?
2,000.
2,000, and goodwill account will be credited by 10,000. This will be the general entry for premium for goodwill in case he is contributing less than the amount of goodwill he is actually required to contribute. So we'll write down being premium for goodwill brought by partner. I hope this point is clear, everyone.
Yes, sir. Clear.
Okay, now since the treatment of premium for goodwill requires us to pass two general entry, first of all for bringing the capital, for bringing the premium for goodwill, and then for the distribution of the goodwill. So for the distribution of the goodwill, we will pass the general entry as premium for goodwill account debit, premium for goodwill account debit to, tell me, to sacrificing partners, na? Who must be sacrificing? A will be sacrificing, A's capital account will be credited, as well as B's capital account will be credited, right? So 10,000, and since their set opening their ratio was profit sharing ratio was 2:1, and C is admitted for 1/4 shares. When you will calculate their sacrificing ratio, you will find that the sacrificing ratio will be same as the old profit sharing ratio of the partner. I'm not going to calculate it. I'm just giving you as I'm just giving you this as your homework. You just need to determine their sacrificing ratio if you wish to, because I already know that their sacrificing ratio will be same as the old profit sharing ratio of the partner. So what I'm going to do, I'm just distributing the premium for goodwill in the old profit sharing ratio, because the sacrificing ratio of the partner is going to remain same. Sacrificing ratio will be same as their old ratio, that will be 3:2. So that means A will be getting 6,000 and B will be getting 4,000 out of it, and we can write down the narration as being premium for goodwill distributed among partners. Got this, everyone? Everybody is able to understand this, yes or no?
Yes, sir.
All right, please note this down quickly. So this is it for today's session, everyone. I'm giving you 1 or 2 questions for your homework as well.
Sir,
But
can
before
you
that,
show
just
the entry for the treatment of capital by partners?
treatment of capital by partners.
Treatment of partner by C, only that.
Okay. Journal entry B, treatment of capital by partner C. All right, everyone else, see, this was question 108. I'm giving you the question for your homework based on the treatment of the goodwill. All right, so I've been just note this down quickly.
Yes, sir.
Okay. See, 108 we already did. Question 109 will be homework. Take the screenshot. Take the screenshot 109 and also 110. Both these questions will be homework. Got it, everyone? Screenshot taken. Eben, Hiba, Mariam, Ayan, and Alexander. All of you done with the screenshot?
Sir, could you show 109?
All right, everyone. So this is it for today's class. Thank you so much for joining in. We'll be continuing. We'll be talking about more regarding the admission of partner, and in the next class probably we'll be talking about the hidden goodwill most probably. But make sure that you do all these questions, then only we will be able to start with a new question. So this is it for today's session. Thank you so much, everyone. Now everyone can sign out. And if anyone have any doubt, they can ask me. Otherwise, you can leave. And Alexander, one thing, is it possible to attend an extra class on Friday for you? Since you were having some doubt, na? You shared your doubts long ago, but by chance we were not able to arrange a session for you. But is it possible to take an extra class on Friday? Since we already have our class I have rescheduled a class on Friday as well. So will it be possible for you to take 2 sessions continuously?
No problem, sir.
No problem. All right. So, all right, everyone. This is it for today's session. We will have our next class on Friday. All right. So this is it. Thank you so much. You can now log out.
Thank you, sir. Bye bye.
Okay. Bye.
Take care.
Thank you, sir.
Thank you, sir.